Hi friends, Timothy here from InformedTrades.com. Today's Friday, August 15th, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I have on the markets, all as a part of helping traders learn. You can learn from my successes, learn from my mistakes, and sort of how I'm looking at the charts. These are real trades placed on a live account. The trades are verified by myfxbook.com. You can see my entire trading history over on informedtrades.com, where we also have a big learning section. So if any of the information I'm presenting is unfamiliar to you, I'll be going over a lot of concepts pretty quickly. You can check out Informed Trades for a structured education in not only my approach to trading, but many other styles, many other markets. Check it out, share your knowledge. We can all learn together. Let's get started with a look at the charts. Okay. Okay, so we're starting with gold. Big down day thus far. So we had, and it looked like I had mentioned a couple days ago, it's been back and forth, I mentioned a couple days ago on August 8th, or actually last Friday now, we had an inverted hammer off 200 exponential moving average, and you could argue that it was also a resistance level going back to here. That's a fairly strong bearish sign. We had a few more candles like this, or tight range candles, that could be indicative of a distribution pattern. And then we have a big down day. So now here's our confirmation. If you interpreted this as, you know, a bearish checkmate, distribution, the small candles at a resistance level, distribution level, that's where you would have entered, and here is where you make the money. I wasn't so sure on that. I mean, I did see that argument. I wasn't so sure on that, though, especially since we closed above the 200 exponential moving average here. But that has happened. In terms of support, you know, we are below the 50 simple moving average now. So once we're below 12, once we're below 1300, I think it's pretty easy to get to 1280. So let's see if we get there. I do think, though, ultimately that gold is pretty close to taking off. It's ready. I don't see any of the factors that would, fundamental factors that have caused this rally over the past 10 years to be any different. So if we're ready for a break, or from the perspective of anticipating a breakout, anticipating that these lows here, actually these lows here too, I don't think we'll see 1240 again, and I really don't think we'll see 1180 again. And from that perspective, I'm happy to buy now, expecting gold to go above the 2011 highs of 1920. Okay, so that's gold. Near-term range 1280 to 1310, I think, is the short-term immediate range. Of course, I'm accumulating now with anticipation of it going much higher over the next few years. Here's Bitcoin. Okay, maybe it has found its bottom. Big down day yesterday. We do have what could be an inverted hammer. I'm looking to see, is this a support level? I don't see a support level. Really could argue here is a support level. Oh, I guess that is a support level. Let's zoom out a little more. Yeah, you could argue there was a support level established at 498 going back to here, December of 2013, December 18th, 17, 18. We had a big bounce off this level that paved the way for a rally all the way up to 984. So this could be a support level, and today's inverted hammer at the support level could be an interesting sign. However, I still think the trend is bearish. We are now below the 50 simple moving average. We are below the 200 exponential moving average. We have a pattern of lower highs, as illustrated by this downward sloping trend line. So I'd be reluctant to buy here. However, we may get a short-term pullback. What I think is a better trading opportunity would be if it rallies to a resistance level. If it rallies, you know, right around here, I think that could be an interesting short opportunity. That's sort of the way I'm seeing Bitcoin. Of course, I got long at like 530, and I'm holding it. You know, if it goes, I'll hold it all the way. If it goes to zero, I'll accept that. It's only a small position. Of course, on the flip side, I'm holding out for 10 times gain, so I do want to see this go to over 5,000. So it is a longer-term, highly speculative type of play I've got with Bitcoin going on. Short-term, though, the trend is definitely bearish in my opinion. Okay, now on to the Forex trades that I have on. Euro, Kiwi, short this pair in the money. Rallying today, so we'll see. I'm not moving to break even. That if price can close at or below 56.76, I will de-risk the trade and I'll move my stop, which is currently at 59.21, down to my entry point, 58.21. That's sort of all there is on Euro Kiwi. Not much else to say here. Just sitting and waiting and seeing how the trade develops. Kiwi Yen, long this. So in both instances, I saw an opportunity to go long New Zealand dollar. I saw that, which has been, I've been trading the New Zealand dollar a lot the past couple months. Generally, it hasn't worked out to me. I'm down about 1%, a little over that. So not too bad, but hasn't been in the positive. Hasn't really been working out profitably for me. Here, though, was a really great signal. Off the 200, hammer off the 200 exponential moving average, off support. Hammer off support is my all-time favorite sign. We were clearly in an uptrend. We did have a 50% pullback from this swing low to this swing high, actually more like a 61.8% pullback. So a pretty good pullback. Hammer off support in a clear uptrend. All those signs, I think, are good for people who, swing traders who want to buy and speculate on resumption of the primary trend upwards. And so far, we've had that. We are getting pretty close to the level at which I can de-risk the trade, which is 87.26. If price can close, if price actually did touch that level, if we can close at or above that level, I'll move my stop, which is currently 85.45, to my entry point at 86.30. So we'll see that I might get to do that today or early next week. Other than that, though, no real, just sitting and watching. And just to clarify, the point at which I will de-risk a trade, meaning move my stop to break even, is usually in a long trend where I'm buying, is going to be a resistance level that is between my entry point and target exit, so target profit. So it's basically the first resistance level that is between my entry point and my target profit. There's definitely some subjectivity there, as is the case with a lot of identification of support and resistance levels, but we can see this resistance level was a little bit established here. May 27th, had a big down day after price reached there. Had some hesitation here as well early June, even more visible here, January 16th. So this level is pretty well established. If price can close at or above that level, I will de-risk the trade, move my stop up. Okay, so that's Kiwi Yen. One other order I have on that got filled yesterday is Canada Swiss, and I'm short Canada Swiss. Let's zoom in a little more here. We could probably zoom in even a little more. Okay, there we go. Okay, so price is below the 50-cent moving average, below the 200 exponential moving average, and both those levels are very close to each other. We also have what could be interpreted as a resistance level, right? It was established back here as a resistance level, January 20th. Act a little bit as a support level here, June 30th, and again here, July 14th. So now I think this level is significant. I think it could be a resistance level. We have the 50 and 200 exponential moving average right there. We did have price sort of stalling, forming a range there. All of those signs. Oh, and on top of that, it is a little bit of a pullback. So from our swing high here to our swing low here, we've got about 50%. So I entered at 83.20. My stop is at 83.18, excuse me. My stop is at 83.58, risking 40 pips. My target profit is 81.78, which is a support level established here as well. I'll de-risk the trade. Right now it's slightly out of the money, basically at break even. I do have the 50 and 200 exponential moving average as an additional buffer, so price is going to have to clear both those to get to my stop. I'm risking 40 pips to gain, what is it? 140? Yeah, 140. So reward risk is about 3.66, I think. Yeah, so that's this trade. If price can close below 82.83, I will de-risk the trade. But for now, just sitting and watching. And that's sort of about it for my trades. At this point, I have 3 trades on. None of them have been de-risked. So I could, by that I mean if my stop gets hit, I will lose money. I'm risking 0.25% on each trade, so I have 0.75% of my account balance at risk. I don't like to risk more than 1% at any given time, so I have room for one more trade. I scanned the market today, all the G7 currencies, all the combinations of those, G8 actually. Didn't really see anything that I thought was a good setup. Got to be picky. Saw some things that were kind of okay, but upon closer examination, I didn't have the confidence in it. Didn't really strike me. Didn't meet all the criteria I want in terms of a pullback and a a clear trend, a pullback within that trend, candlestick pullback to a support or resistance level, having candlestick confirmation. I didn't really have all of those signs that I really want to see, so so I decided to hold off on putting in any additional orders today. That's about it for my trading for this week. Hope you all are enjoying your trading. Best of luck in your trading, and we'll see you next week. Take care.